So listen guys, let's begin. In this session, we're going to be discussing about section 115 BAC. Now you might wonder that we've already discussed about it. Yes, we've already discussed about it. But the thing is, I always do 115 BAC once again towards the end. The reason is, in the course of our entire syllabus, we have spoken about 115 BAC in bits and pieces here and there. We saw a little bit in the first chapter, how to compute tax. Then we saw a little bit in salaries chapter, a little bit in PGBP, little bit in IFOS, little bit in set off. But as a consolidated discussion, we did not do. So that is why now that you have knowledge of the entire syllabus, towards the end of the syllabus now, if we talk about the whole of 115 BSc once again, it will make a good amount of difference to your confidence on this section. So listen to me. I'm discussing with you about 115 BSc once again. Listen, first of all, this 115 BSc is today called as the default regime. It's called as a default regime. And this default regime, this section, point by point, let's go. This default regime, first of all, is applicable to whom? What is the applicability? Is it applicable to all assessees? No. It is applicable only to individuals, HUFs, AOP, BOY, and AJP. You know, earlier, it was applicable only to individuals and HUFs. It's a Finance Act 2023 amendment, because of which it is now applicable to AOP, BOY, and AJP also. Now, and is it applicable? This is the assessee to whom the section is applicable. But what about income? Is it applicable to all the incomes of the assessee? When I say all the incomes of the assessee, I am actually targeting the special rate incomes. That will this section apply to special rate incomes also? No. See, whatever are your special rate incomes, they will continue to be taxed at the same special rate tax only. But whatever is your normal rate income, for that normal rate income, generally we apply the slab rates, right? Those slab rates are what's going to change in 115 BSc. You're understanding? Special rate incomes will still be taxed on the basis of special rate tax liability only. Like your 112 LTCG will still be taxed at 20% only. Your 111A STCG will still be taxed at 15% only. Your normal rate income is what I'm talking about. That we generally tax on the basis of slab rates, right? Those slab rates will undergo a change. Now, what are going to be these new slab rates under 115 BSc? First of all, the basic exemption limit is 3 lakhs. So if your income is up to 3 lakhs, then you'll have to pay no tax. Okay. Then your slabs will keep increasing by 3 lakh, and your tax rate will keep increasing by 5%. So your second slab will be, if your income is more than 3 lakh but up to 6 lakhs, then you will have to pay 5% tax. If your income is more than 6 lakhs but up to 9 lakhs, then what will happen? See, income up to 3 lakhs, no tax. 3 lakh to 6 lakh, in between you have 3 lakh income. On this 3 lakh income, 5% tax will be how much? 5% of 3 lakh will be 15,000, guys. So if your income is between 6 lakh to 9 lakh, up to 6 lakhs income, you will anyways have to pay 15,000 plus 10% of your income in excess of 6 lakhs. Okay. Then, if your income is between 9 lakh to 12 lakh, if your income is going to fall between 9 lakh to 12 lakh, then income up to 3 lakh, no tax. 3 lakh to 6 lakhs, 3 lakhs income, on that 5% tax is going to be 15,000. Then 6 lakh to 9 lakh, in between 3 lakhs income, on that tax 10% is going to be 30,000. So 6 lakh to 9 lakh, up to 9 lakh income, you anyways have to pay 45,000 tax, guys. How 45,000? See, up to 3 lakh, no tax. 3 lakh to 6 lakh, on this 3 lakh, you'll have to pay 5%, which means you'll have to pay 15,000. Then on this 6 lakh to 9 lakh, this is going to be another 3 lakh. On this 3 lakh, how much you'll pay? 10% you'll pay. So 3 lakh into 10%, here you'll have to pay 30,000. So if your income is more than 9 lakh, up to 9 lakh income, you anyways have to pay how much tax? You anyways have to pay 45,000 tax. So 45,000 plus 15% of whatever income you have earned in excess of 9 lakhs. Then if your income is 12 lakh to 15 lakh, then your tax rate would be, see, up to 12 lakh, how much tax do you have to pay? We'll do the same math. Up to 3 lakh, no tax. 3 lakh to 6 lakh, 3 lakhs income you have on that 5%, 15,000. 6 lakh to 9 lakh, again 3 lakh income you have on that 10% is going to be 30,000. 9 lakh to 12 lakh, again 3 lakh income on this 3 lakh, 15% tax is going to be 45,000. So if your income is more than 12 lakh, then up to 12 lakh of your income, you anyways have to pay 90,000 tax, guys. Sum of all these numbers, you'll anyways have to pay 90,000 tax, 90,000 plus 20% of whatever income you have earned in excess of 12 lakh. Then if your income is more than 15 lakhs, then in that case, up to 3 lakh, you'll have to pay no tax. 3 lakh to 6 lakh, your income, you have 3 lakhs in between, on this 5% will be 15,000. Then 6 lakh to 9 lakh, in between you have 3 lakhs income, on the 10% is going to be 30,000. 9 lakh to 12 lakh, again you have 3 lakh income, on that 15% is going to be 45,000. 12 lakh to 15 lakh, again you have 3 lakh, on that 20% is going to be 60,000. So if your income is more than 15 lakh, then up to 15 lakh, you anyways have to pay how much? Up to 15 lakh, total of this, you'll anyways have to pay 1,50,000, guys. So 1,50,000 plus no 25%. See, the tax rates are increasing by 5%. No. So naturally, if you see over here, it should be 25%, but not 25%. I'll straight away go to 30%. 30% of my assessee's income in excess of 15 lakhs. Understanding. So these are going to be your slab rates under 115 BAC. So first of all, we discussed that 115 BAC is applicable to whom? It's a default regime. It is applicable to whom? It is applicable only to individual HUF, AOP, BOI, AJP. Then we said, is it applicable to all income? Will it also apply to special rate income? We said no. Special rate income will continue to be taxed at the same special rate only. It's only the normal rate income which is generally taxed at the slab rate. Those slab rates will change. All right. So these are going to be your revised slab rates. Up to 3 lakh, no tax. 3 lakh to 6 lakh, 5%. 6 lakh to 9 lakh, 15,000 plus 10%, 9 lakh to 12 lakh, 45,000 plus 15%, 12 lakh to 15 lakh, 90,000 plus 20%, and more than 15 lakh will be 1,50,000 plus 30%. So if your income is more than 15 lakh, then up to 15 lakh, you anyways have to pay 1,50,000 plus 30% of the excess. You are aware of all of this. In our basic concepts chapter itself, we had covered all of this, just sort of giving you a reminder over here. All right, so this was about a discussion regarding that this section will apply to which assessee and it will apply to which incomes. All right, now listen to my next point. My next discussion is going to be about the basic exemption limit. See, what is the basic exemption limit under 115 BAC? It is 3 lakhs, right? What if your assessee is a senior citizen? What if your assessee is a super senior citizen? Do you have any special basic exemption limit? Do you have a higher basic exemption limit for senior citizens, super senior citizen? No. Even for senior citizen, even for super senior citizen also, the slab rate does not change. The same slab rate, the same basic exemption limit only will apply for senior citizen and super senior citizen also. So for all assessees, the basic exemption limit will become 3 lakh for all assessees. Even for senior citizen, even for super senior citizen, the basic exemption limit will remain 3 lakh only for all assessees. This was my third point. All right. Now listen to the fourth point under 115 BAC. See, what about section 87A rebate? Will you get 87A rebate under 115 BAC? Yes, you will get 87A rebate. Maximum, what are your conditions? But your conditions are, condition number 1, the assessee has to be a resident. Condition number 2, the assessee has to be an individual. And condition number 3 is that the assessee's total income has to be within 7 lakhs. If all these conditions are fulfilled, then you will get section 87A rebate. But in that case, maximum 87A rebate, how much you can get? The maximum 87A rebate is rupees 25,000. See, under the basic provisions, under the normal provisions, if you see, under the normal provisions, if you see, the maximum 87A rebate is 12,500. Under 115 BAC, 87A rebate is exact double. It is 25,000. In normal provisions, if you see, you will get 87A rebate, only total income is within 5 lakhs. But under 115 BAC, your limit is 7 lakhs. Okay. But however, even if your income is more than 7 lakhs, even if your total income is more than 7 lakh, even then, we have something like marginal relief. Do you recall? Under 87A rebate only, we have something like marginal relief. We have You remember in our basic concepts chapter, we've done all those calculations. What if your assessee's income is more than 7 lakhs? Then in that case, very similar to marginal relief, what calculation you do, similar calculation we do even for 87A rebate. Like I'll give you an example. Let's say my assessee's total income happens to be 7 lakh 10,000. Okay, I'm helping you understand 87A rebate. Let's say assessee's total income is 7 lakh 10,000. Assessee is following 115 BAC. I want you to find the tax liability. So what's going to be our first step, guys? Our first step is going to be basic tax. Now basic tax, which slab is my assessee falling under, guys? 7 lakh 10,000. So my assessee is falling under this slab. Income is more than 6 lakh up to 9 lakh. The tax is going to be 15,000 plus 10% of the excess. So the basic tax of this assessee is going to be 15,000 plus 10% of the assessee's income in excess of 6 lakhs. So if you do the math, this is going to be 26,000 rupees. The basic tax is going to be 26,000 rupees, right? Then from this, you will think about 87A rebate. But will you straight away get 87A rebate? No, because total income is more than 7 lakh. So first I've calculated the basic tax. On the basis of the normal slab rates, we've calculated the basic tax. And now we're thinking about 87A rebate. Now see, 87A rebate says assessee should be a resident. Let's say assessee is a resident. Let's say assessee is an individual, but total income is more than 7 lakhs. So straight away you can't give rebate, but you do have a sort of a relief with respect to 87A rebate. Now how will you calculate that? See, what if the assessee's total income was 7 lakh? Then what would you have done? If the assessee's total income was 7 lakhs, in that case, first of all, what would the basic tax be? The basic tax would have been same 15,000 plus 10% of the assessee's income in excess of 6 lakhs. So that would have been 25,000. And then you would have given the assessee 87A rebate, guys. If assessee's total income is 7 lakh, up to 7 lakh, you will get 87A rebate. How much? Maximum 25,000 you will get. So the assessee's tax liability would have been 0. So if assessee's total income is 7 lakh 10,000, like over here, how much tax are you asking the assessee to pay? You're asking the assessee to pay 26,000 tax. All right. But however, what if the assessee's total income is 7 lakh rupees, imaginary 7 lakh rupees, then how much tax are you asking the assessee to pay? You're not asking the assessee to pay any tax at all. So what is the extra income which your assessee has earned? 10,000 rupees. For earning this extra 10,000, how much extra tax are you asking the assessee to pay? 26,000. Same thing we do even in marginal relief. Now tell me, is it fair? For 10,000 extra income, you're asking your assessee to pay 26,000 extra tax. How can tax be more than income, guys? It's not fair. So therefore, what is the difference? The difference over here is 16,000 rupees, and this 16,000 rupees is what you can enjoy as Section 87A rebate. So my assessee will get over here an 87A rebate of 16,000 rupees. All right. So the net tax liability of this assessee is going to be 10,000 rupees. And then to this, you will no surcharge, guys, because income is within 50 lakhs. So no marginal relief also. Straight away, you will add cess at the rate of 4%. That's going to be 400 rupees. So the total tax liability of this assessee is going to be 10,400 rupees. Are we understanding this? Understanding, guys. So when it comes to 115 BAC, when you're doing 87A rebate calculation, please remember that even if the total income is more than 7 lakhs, even then in some cases, you will still be able to enjoy 87A rebate. So, but tell me, will you do this calculation even if the income is 10 lakhs? Will you waste your time? No. So only if the assessee's total is same like marginal relief concept, guys. When do we calculate marginal relief? Only when the total income of the assessee is close to the surcharge limits, right? Same way, even under 87A rebate, under 115 BAC, you will think about 87A rebate only if your total income of the assessee is close to 7 lakhs. Like up to 7 lakh 50, you can do this calculation in the examination. Beyond that, not required. All right, so 87A rebate is a slightly different calculation in 115 BAC. Normal 87A rebate is 25,000 up to total income of 7 lakhs. But even if the assessee's income is more than 7 lakhs, even then you may get 87A rebate by doing this calculation. So something like marginal relief we have in 87A rebate under 115 BSE. But do you have all this even in the normal provisions of the Act? No. Normal provisions, total income up to 5 lakh, you will get 12,500 rebate. If total income is even 1 rupee more than 5 lakh, forget about 87A rebate. No relief calculation with respect to rebate also. That's all. If it is more than 5 lakh, no rebate. But in 115 BSE, even if your total income is more than 7 lakhs, you may still have rebate, all right, on the basis of this calculation over here. You understood what exactly we did over here. We first calculated we first did the calculation on without rebate. We said assessee's tax is 26,000. Then we saw what if the assessee's income was 7 lakhs, then tax would have been 0. So my assessee has earned 10,000 extra income. For 10,000 extra income, they're asking the assessee to pay 26,000 extra tax. How is it fair? Tax is more and income is less. That's not fair. So the difference between these two we got as a rebate. All right. And one more thing. This is also called rebate only. You're understanding. You will not call this as relief with respect to rebate and all. No. One student had asked about this, so I'm getting reminded. You will still call this also as 87A rebate only. All right. We are using the word relief because I'm just trying to connect this whole calculation with the calculation that we do under marginal relief. But even this is going to be called as 87A rebate only. All right. You got it right? Under 115 BSE, even if your income is more than 7 lakhs, you may still have 87A rebate because of this relief kind of calculation. Okay, this was our 87A rebate discussion under 115 BSE. What about surcharge? Will you have surcharge under 115 BSE? Yes. Even over here, you will have surcharge. But the thing is, see, if you look at the normal provisions of the Act, under the normal provisions of the Act, what is the maximum surcharge rate? In the normal provisions of the Act, the maximum surcharge rate is 37%, right? But under 115 BSE, if you see, the maximum surcharge rate is going to be 25%. That's the only difference. But apart from that, surcharge, marginal relief will apply even over here, just like normal provisions. Only thing is, maximum surcharge rate is going to be 25% under 115 BSE and not 37%, which is otherwise. All right. Then you are very well aware of AMT as well. We just discussed it. What about AMT? If your assessee is following 115 BSE, will AMT apply? No, AMT will not apply. If assessee has AMT credit, can AMT credit be utilized against 115 BSE tax? No, it cannot be utilized. Even that we have learned just in the last session only. All right. Then coming to the next point, see, under 115 BSE, there are many benefits which you will have to give up. All right. There are multiple benefits which you have to give up because under 115 BSE, we are giving you comparatively lower tax rates we are giving you. So if you want to enjoy these lower tax rates, then you have to give up some benefits. So what are the benefits that your assessee will have to give up? Under 115 BSE, benefits which have to be given up by the assessee, I'll discuss them with you one by one. I'll discuss them with you in the same sequence in which we had learned all the chapters. Okay. See, first of all, in our residential status chapter, 115 BSE will not have any impact at all. So after residential status, after scope of total income, what did we learn? We had learned about exempt incomes, remember? So if you look at the exempt incomes chapter, in the exempt incomes chapter, we had learned about two main things. We had learned about agricultural income and 10AA also we had covered there itself. So agricultural income will not be affected because of 115 BSE. But if your assessee is following 115 BSE, then 10AA will be not applicable for the assessee. Assessee will not be able to enjoy 10AA tax holiday. He will not be able to enjoy. Then after the exempt incomes chapter, we had learnt about the 5 heads of income. So if you look at the first head of income, if you look at the salaries head of income, in the salaries head of income, point number 1, allowances. With respect to allowances, whatever exemption you get, that exemption you will not get. Like for example, HRA, you will not get any exemption. For HRA, you generally calculate 3 things, right? 50% of salary, 40% of salary, depending upon metro, non-metro. HRA actually received, then rent paid minus 10% of salary, whichever is least you give me as exemption. So that exemption you will not get if your assessee is following 115 BSE. Any allowance you see, children education allowance, you give 100 per month per child exemption, gone. Transport allowance, wait. Then when it comes to children hostel allowance, you give 300 per month per child exemption, gone. So allowances like HRA, children education allowance, children hostel allowance, whatever exemption you generally enjoy with respect to allowances, those exemptions you will not get under 115 BAC. However, there are some allowances which you will continue to enjoy exemption. Like, for example, transport allowance. In transport allowance, you get 3,200 per month exemption for blind, deaf, dumb, and orthopedically handicapped employees. That exemption you can continue to enjoy. Then traveling allowance, conveyance allowance, even daily allowance. In these three allowances, whatever you actually incurred for official purposes will be exempt, right? So even in these three allowances also, you can continue to enjoy the exemption. Whatever you've actually incurred for official purposes will be exempt even under 115 BAC. Then, if your assessee happens to be an Indian citizen, if the assessee happens to be an Indian citizen, and if the employer happens to be the government of India, and if this employee is rendering services outside India, you know this, right? There's a special provision that even though he's rendering services outside India, whatever salary income he earns, the salary income is deemed to accrue in India. Right. And so, whatever his salary income he earns, whatever allowances he earns, whatever perquisites he earns, everything is deemed to accrue or arise in India only. But however, these allowances and perquisites are going to be exempt. They will accrue in India. The salary will also accrue in India. The allowances also will accrue in India. The perquisites also will accrue in India. But allowances and perquisites will be exempt. This exemption also you can continue to enjoy. Understanding everybody, then you know very well that for your high court and supreme court judges, they generally get some sumptuary allowances, they get some exempt allowances. That exemption is gone, all that's going to be taxable for them. So these 5 allowances you can continue to enjoy the exemption. All other allowances you will not get any exemption anymore. All other allowances, you will not get any exemption. Getting it, guys? So when it comes to exempt incomes chapter, in the exempt incomes chapter, 10AA tax holiday, you will not enjoy anymore. When we talk about the salaries chapter, the allowances, whatever exemption you enjoy under allowances, you will not enjoy those exemptions anymore. Your HRA exemption, children education allowance exemption, children hostel allowance exemption, all those exemptions you will not enjoy. But however, there are 5 allowances where you will still enjoy the exemption. Transport allowance, traveling allowance, conveyance allowance, daily allowance. Then this one, did you understand? If your assessee happens to be an Indian citizen and the employer is government of India, and if he's rendering services outside India, even though he's rendering services outside India, his salary income is deemed to accrue or arise in India. So therefore, his salary, his allowances, his perquisites, all of them are deemed to accrue or arise in India. But his allowances and perquisites will be exempt, what we generally call as foreign allowances. So that exemption of foreign allowances he can continue to enjoy. Okay, so so first of all, I told you 10AA deduction you will not get. Then we said allowances exemption you will not get, HRA exemption you will not get. Then under salaries, you get LTC exemption, right? If your assessee has taken leave travel concession from the employer for a vacation in India, twice in a block, 4 years, he plus his family, that LTC is fully exempt. You know, right? In simple words, if the employer is going to bear your vacation travel cost, not talking about hotel expenses, lodging expenses and all, only your tickets, your travel expenses, if the employer is bearing, that is leave travel concession, it's generally exempt. Maximum 2 children, family, maximum 2 children, it is allowed. Exemption is allowed. But however, if you're following 115 BSc, LTC exemption, you will not get. Whatever LTC you're getting, that LTC will be fully taxable. And then you will not get section 16 deductions. Now, section 16, if you see, we have totally 3 deductions, guys. Number 1, we have professional tax deduction, which you will not enjoy under 115 BSc. The number 2, entertainment allowance, even that deduction you will not enjoy. However, standard deduction, the 50,000 standard deduction, that you can still enjoy. So under the exempt incomes chapter, section 10 AA deduction you will not get. Under the salaries chapter, allowances, whatever exemption you enjoy, HRA, whatever exemption you enjoy, you will not get those exemptions anymore. But these five allowances, you will continue to get the exemption. Transport allowance, 3,200 per month exemption for blind, deaf, dumb, and orthopedically handicapped employees, you will continue to enjoy. Traveling allowance, conveyance allowance, daily allowance, whatever you've incurred for official purposes, you will continue to enjoy the exemption. Then foreign allowances and perquisites of Indian citizens working outside India for the government of India, that exemption you will continue to enjoy. So these allowances you will continue to enjoy. However, other allowances, HRA and all exemption you will not get anymore. LTC exemption also you will not enjoy, and section 16 deductions, professional tax and entertainment allowance you will not enjoy, but however standard deduction you will continue to enjoy. Understanding, everybody? So this was from your salaries chapter. Now, after your salaries head, what was the next head of income that we had learned? We had learned about the IFHP head. Now, in the IFHP head, we know that the biggest benefit is section 24, interest on borrowed capital. Now, if your house property happens to be a let out property, then there is no change. If your property happens to be self-occupied property, then interest deduction, interest under section 24, that deduction you will not get under IFHP. You get the 2 limits you have, right? 30,000 limit and 2 lakhs limit. That interest deduction itself you will not get for self-occupied property. But if it is let out property, life is as usual, no change. But if your property is a self-occupied property, then interest under section 24, that deduction you will not get at all. Understanding? Then after this, our next head of income was PGBP. Now in PGBP, there are some very interesting points under 115 BAC. The first point being, see, if your assessee has incurred expense on scientific research, scientific research can be either in-house scientific research or it can be a contribution to outsiders, guys. So if your assessee is following 115 BAC, see, in-house scientific research, he will still get section 35 reduction. But contribution to outsiders, that he will not get. Understanding, everybody? So if your assessee is following 115 BAC under section 35, contribution to outsiders, that deduction he will not get under section 35. Getting it? However, in-house scientific research, he can continue to enjoy the deduction. Only contribution to outsiders alone, he will not get a deduction. This is your first takeaway from PGBP. The second benefit from PGBP, which is taken off, the big, huge benefit, section 35 AD. 35 AD benefit for specified businesses, you will not get under 115 BAC. Then the third thing which is taken away from you under PGBP is additional depreciation. So you can enjoy normal depreciation, but additional depreciation, that additional 20% depreciation, you will not get under 115 BAC. However, please remember, in case you have any unabsorbed depreciation, now unabsorbed depreciation you're allowed to carry forward permanently, indefinitely, and you can set it off against any income except salaries, right? Now, in this unabsorbed depreciation, if you have any additional depreciation inside this, if you have any unabsorbed depreciation, and if this includes any additional depreciation, first of all, you have to ignore this additional depreciation. Basically, you can't carry it forward. You can't adjust it anymore. You'll have to ignore it. And one more thing, this additional depreciation also has to be reversed. Now, how will you reverse it? How will you reverse the unabsorbed additional depreciation? You will reverse it by adding it back to the block. So you will add it back to the block of asset. All right. But listen, are you going to add back the whole additional depreciation? No. Only whatever unabsorbed additional depreciation you have, only the unabsorbed additional depreciation you will ignore. Ignore as in you will not carry it forward anymore. You will not adjust it anymore. And you'll also have to reverse it. Reverse it as in you'll have to add it back. You'll have to add it back to the block. All right. So under PGBP, number one, a contribution to outsiders, you will not get the deduction anymore. 3580 deduction you will not get anymore for specified businesses. Additional depreciation you will not be able to enjoy. And unabsorbed depreciation, number one, you can't carry it forward anymore. And number two, in case you have any unabsorbed depreciation which is unabsorbed, you'll have to reverse it by adding it back to the block. Please understand, the entire unabsorbed depreciation, I'm not asking you to reverse. I'm asking you to reverse only that part of unabsorbed depreciation, which is only that part of additional depreciation which is remaining unabsorbed. Okay, then after your PGBP head, the next head of income that you had learned was capital gains, guys. Now, under capital gains, there is going to be absolutely nothing. I mean, no impact. Because of 115 BC, there's going to be no impact at all in capital gains. Then comes your IFOS head. Now, in IFOS head, do you remember we had learned that in case your assessee happens to be an MP or an MLA, then whatever daily allowance he is earning or whatever constituency allowance he is earning, this is going to come under the IFOS head, and under the IFOS head, it's going to be exempt, guys. MP and MLA, the daily allowance, a constituency allowance. Now that exemption they will not enjoy anymore. So it will still come into the IFOS head, but now under 115 BSE, the daily allowance and the constituency allowance will be taxable. So under IFOS, the impact is on daily allowance and constituency allowance. You will not enjoy the exemption anymore. Okay. Then after the IFOS head, we had learned about clubbing of income, right? Under clubbing of income, do you remember if if a minor child's income is clubbed with the parent's income, we give the parent 1032 exemption, guys. 1032 exemption of rupees 1500 per minor child. Per minor child, you give this exemption. In case any minor children's income is being clubbed into the assessee's income, you give 1032,500 exemption. That exemption you will not get. So only one problem in clubbing, and that one problem is that 1032 exemption, 1500 per child exemption under 1032 you will not get under the clubbing chapter. Then after the clubbing chapter, we had learnt about set off and carry forward of losses. Now under set off and carry forward of losses, under this chapter, if you see, there's going to be only one small problem even over here. One small thing only. Easy, very easy. Listen to me, but very important. See, if your assessee is having any loss from house property, all right, if assessee is having loss from house property, can the assessee do intra-head adjustment? Intra-head, as in if assessee is having some other income from house property, can the assessee adjust? Yes. Can the assessee do intra-head adjustment? Inter-head adjustment. Can the assessee do inter-head adjustment? Yes, the assessee can do inter-head adjustment, but up to how much? Only up to 2 lakh, the assessee can do inter-head adjustment. Beyond that, assessee can't do inter-head adjustment. Can the assessee carry forward the loss to the next year? Yes. What if the assessee has filed the ITR late? Then can the assessee carry forward the loss? Yes. Loss from house property, even if you file the ITR late, you can carry forward the loss. Right, guys? This is under the normal provisions. But if your assessee is following 115 BSE, intra-head, yes, you can do it. Inter-head, you can't do it. Under the normal provisions, you can do inter-head, but maximum 2 lakhs, right? If you're following 115 BSE, it is inter-head adjustment which you can't do. See, you can still do intra-head. You can still carry forward the loss. Even if you file a ITR late, you can still carry forward the loss. Only thing that you can't do under 115 BSE in the set off chapter is loss from house property, inter-head adjustment you can't do. You can do intra-head, you can carry forward, but you can't do inter-head adjustment. In normal provisions, if you see, inter-head you can do up to 2 lakh. Here, no 2 lakh criteria, guys. You can't do inter-head at all. Forget about 2 lakh criteria. You can't do inter-head adjustment of loss from house property at all. But tell me, other losses, can you do inter-head adjustment? Yes. Only loss from house property only I'm touching. Loss from house property, inter-head, I will not allow you to do. Okay, guys. Then after set off and carry forward, what did we learn after this? After this, we had learned about chapter 6A. Now, under chapter 6A, if you see, the whole of chapter 6A goes into the dustbin. You don't get chapter 6A at all. The whole of chapter 6A, you do not enjoy. None of the sections you will get as a deduction. However, there's an exception. Section 80JJAA, additional employees, 30%, 30%, 30% across 3 years, that you can still enjoy. Then section 80 CCD subsection 2, employers contribution to NPS, that you can continue to enjoy. Then section 80 CCH subsection 2, employers contribution to Agniveer Corpus Fund, even this you can continue to enjoy. So these 3 you can continue to enjoy, but the rest of chapter 6A you will not be able to enjoy under 115 BSE. Getting it? So these are all the benefits which will get taken away from you under 115 BSE. You've understood, right? Can I give you a quick revision once again? So we're talking about what are the benefits which will get taken away from you. Under the exempt incomes chapter, if you see, section 10AA, tax holiday, you will not get anymore. Under the salaries chapter, if you see, allowances, HRA and all, whatever exemption you get, you will not get that exemption. But however, transport allowance, you can continue to enjoy the exemption. Traveling allowance, you can continue to enjoy the exemption. Conveyance, daily allowance, you can continue to enjoy the exemption. Also, foreign allowances, foreign perquisites, which are given to Indian citizens who are working for the government of India outside India, this also you will continue to enjoy the exemption. But other allowances and perquisites, you will not get the exemption. LTC exemption you will not get. Under section 16, professional tax and entertainment allowance deduction you will not get. But standard deduction 50,000 you can still continue to enjoy. Then under the IFHP chapter, if you see, Let-out property, there's going to be no impact at all. Self-occupied property, interest under section 24, I will not let you enjoy. PGBP chapter, if you see, contribution to outsiders for scientific research, social science, statistical research, that deduction under section 35 we will not allow. See, in-house scientific research you can still enjoy, but contribution to outsiders you cannot enjoy. Also 35ED deduction you cannot enjoy, no additional depreciation. And in unabsorbed depreciation, if you have any additional depreciation, if there's normal depreciation, you can carry forward. But if you have additional depreciation in unabsorbed depreciation, you can't carry it forward, you can't adjust it, you'll have to ignore it, and you have to reverse it by adding it back to the block. Capital gains, we said there's no change. IFOS, daily allowance and constituency allowance of your MPs and MLAs, you will not enjoy the exemption. Then under clubbing chapter, section 1032, 1500 exemption per minor child that you generally get, even that exemption you will not get under 115 BAC. Then in the set off and carry forward chapter, loss from house property, inter-head adjustment we will not allow. Intra-head you can still do. Carry forward you can still carry forward. Only inter-head we will not let you adjust. And lastly, the whole of chapter 6A you will not get, but however 80JJAA, 80CCD subsection 2 and 80CCH subsection 2, these deductions you can continue to enjoy. Understanding, everybody? So this was our entire discussion with respect to the benefits that you'll have to give up under 115 BAC. So under 115 BAC, first of all, we have learned about the applicability. That is, we have learned that 115 BAC is going to apply to which assessees. Then we have learned 115 BAC will apply to which incomes. To special rate incomes, special rate tax will continue to apply. Only to normal rate incomes, the slab rates will change because of 115 BAC. Then after this, we had learned that basic exemption limit will remain 3 lakhs, even for senior citizens and super senior citizens. Then we had a very interesting discussion with respect to 87A rebate. Even if total income is more than 7 lakhs, even then you might get 87A rebate because of this relief kind of calculation. Then we said surcharge under 115 BAC will be maximum 25%, AMT will not apply, and then we've learned all these benefits which you will have to give up because of section 115 BAC. Okay, now listen to my next point under 115 BAC. See, can you keep jumping? Can you keep jumping between the optional, between 115 BAC and normal provisions? Can you keep jumping like that? See, first of all, understand that 115 BAC is a default regime. Default regime means if you don't specifically exercise the option to opt out, then by default, we will assume that you are following 115 BAC. So 115 BAC is default, which means if you want to not apply 115 BAC, you have to specifically opt out. If you don't tell us anything, we will assume that you are following 115 BAC. We will assume that you are following 115 BAC. It's a default regime. Okay. Then coming to point number 2. If your assessee does not have PGBP, then the assessee can keep changing. 1 year 115 BAC, another year he opted out, then another year again 115 BAC. Like that he can keep jumping. But however, if the assessee is having PGBP, then in that case, the assessee can opt out only once. The assessee can opt out only once. The assessee can, see, understand like this, he can go out of 115 BAC only once and he can come back only once. See, like for example, previous year 23-24. By default, what are you going to follow by default? 115 BAC. You followed 115 BAC by default. Okay. In 24-25, let us say my assessee decided to opt out. Can your assessee opt out? Yes, my assessee can opt out. He can opt out once. First time he is opting out, which means he's going to follow the normal provisions. Now in 25-26 also, let us say he decided to follow the normal provisions. See, once he opts out, now he's going to be in the normal provisions only. But however, in 26-27, he wants to come back to 115 BAC. Can he come back to 115 BAC? Yes. He can go out once and he can come back once. Now that he's come back to 115 BAC, now forever he has to stay in 115 BAC only. In previous year 27-28, can he decide to opt out once again? No. You can opt out only once and you can come back only once. You have already opted out. So can you opt out once again? We will not let you opt out. So now you will have to continue to follow 115 BAC only. However, let us say 1 year, let us say once, let us say the assessee reaches a point of time where the assessee does not have any PGBP anymore. Earlier, he was having PGBP and he reaches a point where he does not have PGBP anymore. If he doesn't have PGBP anymore, then he will get, in that case, he will fall under point number 2, which means if he doesn't have any PGBP anymore, now he can start jumping, he can start changing 115 BAC, normal, default, normal, like that he can keep changing. Get understanding? So your assessee can opt out once and he can come back once. So once he has opted out, now he'll continue to follow the normal provisions. If he wants to come back to 115 BSc, you're welcome. You can come back. But once you come back, can you go back to normal provisions? No. You can opt out only once and you've already opted out in the past. Now you can't opt out once again. Getting it? So by default, we will assume that you're following 115 BSc. If you decide to not follow 115 BSc, if you're not having PGBP, no problem. You can keep jumping with absolute freedom. You can keep jumping. But if your assessee is having PGBP, then assessee will have to think twice. Because if the assessee opts out of 115 BSc once, okay, then he can come back to 115 BSc, but he can't go back again. He can opt out once and he can come back once. If he has opted out, then he will continue to be in the normal provisions. If he wants to come back, he can come back. But once he comes back, he cannot go back to the normal provisions again. But once he doesn't have PGBP anymore, if he stops having PGBP, then he'll fall under the first criteria. Then if he falls under the first criteria, then of course he can keep changing again and again. He can keep changing. Crystal clear. Yes, so this was our discussion regarding changing the regimes under 115 BSc. And finally, guys, my final point under 115 BSc, what about education cess? Education cess is going to be normal, usual calculation under 115 BSc. No special treatment for 115 BSc. Normal 4% education cess, health and education cess will continue to apply. All right, so this was it about our entire discussion with respect to 115 BSc. It's applicable to individual HUF, AOP, BOY, AJP. Special rate income will continue to be taxed at the special rates. Normal rate incomes will be taxed on the basis of the slab rates. Then these are the slab rates. The slabs will keep changing by 5 lakhs, and the tax rates will keep changing by 5%, but we don't have 25%. Then after this, we had learned that the basic exemption limit will remain 3 lakhs for all assessees. Even for senior citizen, super senior citizen, it will remain 3 lakhs. Then we learned if assessee's income is within 7 lakhs, then we'll give the assessee 87A rebate. Even if it is more than 7 lakh, then a sort of a relief calculation we will do. Then we learned surcharge maximum can be 25%, no AMT concept in 115 BSc. We learned all these benefits assessee will have to give up. And finally, we learned that 115 BSc is the default regime, which means by default, we will assume that you're following 115 BSc. And if you don't want to follow 115 BSc, you have to specifically opt out. If you don't opt out of 115 BSc, we'll assume that you're following 115 BSc by default. If you want to opt out, you'll have to exercise the option. Before filing a return itself, you'll have to exercise the option. Getting Yes, guys. So if assessee is if assessee is individual HUF, AOP, BOY, AJP, 115 BSc is a default regime, which means by default we will assume assessee is following this. If assessee does not want to follow default regime, then on or before filing the income tax return, he has to exercise the option of opting out. He has to specifically opt out. Only then normal provisions. Otherwise, by default, 115 BSc. Then we learned if assessee is not having PGBP, he can keep changing. But if assessee is having PGBP, yes, he can opt out. Once he opts out, then normal provisions will continue to apply. If he wants to come back, yes, he can come back. But once he comes back, he can't opt out once again. That we will not allow. When can he opt out once again? If he does not have PGBP anymore, then he will fall under this category. This category, he can keep opting out, he can keep coming back there, he can keep changing like that year to year. And finally, we learned that education cess, that is going to apply in 115 BSc also, just like the normal provisions. All right, so this was our entire discussion on 115 BSc. I'll close this session over here.